everyone, and welcome to the 16th episode of Not Just Numbers, Honest Conversations with a Financial Advisor and Lawyer. I am Madison Demora, and I am here with Mike Gary. Mike is a financial advisor and a CFP and the founder and the CEO of Yardley Wealth Management. He is also an estate planning lawyer, and his law firm is Yardley Estate Planning. Hey, Mike.
Hey, Maddie. How are you?
Hey. Good. Can we just take a minute? It's the 16th episode. That's crazy.
That is crazy. Sweet 16. I
Yeah.
was thinking about that when you said 16th episode.
Yeah.
Numbers are going to start to get harder to say.
Yeah. So, Mike, I showed you a article not too long ago, and it was from the Wall Street Journal, and it was titled "How This Year's Hottest Investment Could End Up Costing You." And that was by Eric Wallerstein. What did you think of the article?
I thought it was a great article.
Yeah.
And usually when we find articles for each other, we're critical, but this one was good.
Yeah.
No, I didn't like some of the sentiments in it, but I thought for the most part, it's good advice.
Yeah. Okay.
I can't wait to dive into it.
Alrighty. So, like our previous episodes, I'm going to read a little summary of the article and ask Mike some questions and get his opinion. So, here is the summary. Investors are holding more cash in money market funds due to the market turbulence and attractive 5% plus yields. However, experts caution that excessive cash holdings can lead to missed opportunities and eroded returns over time due to fees, taxes, and inflation. Money market funds are safe but not insured, and their value can fluctuate in times of crisis. While the Fed's rate policies make these funds attractive now, long-term overexposure to cash may result in lower returns and missed investment gains. Diversifying across stocks, bonds, and riskier assets is recommended for a more balanced approach. All right, so let's get to the first question. I have, in the current economic climate, with the money market funds offering attractive yields, what factors should investors consider when deciding how much cash to hold in their portfolios? And how might fees, taxes, and inflation impact their investment decisions?
Great question. And it's funny. I don't think it has anything to the answer. I don't think has anything to do with what the rates are, right? So you need cash for running your household, your person. You need emergency cash for things that come up, right? Like if the driveway needs to be replaced or you need a new car or big car repairs, right? So you need operating cash and emergency cash. And then if you are in retirement or close to retirement, your portfolio should have some cash too. And that cash will depend on the amount of distributions you're taking. So you could be retired and not taking distributions, let's say, because you have a pension or your significant other is working. And so you still might not need cash if you're retired. But if you're taking distributions from your account, then you probably should have some cash set aside. And we typically will have 3 to 6 months cash in people's accounts if they're taking systematic withdrawals, right? None of that has to do with whether a money fund is earning 3% or 5%.
So when they say cash, they don't mean physical cash. They just mean the money that you have on hand.
Right. Yeah.
Okay.
So when finance people talk about cash, it could be money on hand or cash in a savings or bank account that could be liquidated like immediately. So you could take it out. You could go to the bank and take it out in dollar bills. That's cash. And also in investment accounts, there'll often be something called cash or insured cash in a lot of accounts. That's the default place for money that's not invested. It goes to a cash sweep vehicle, which is maybe cash or sometimes a money fund.
Okay.
But a money fund then is different than cash.
So what is a money market fund and how risky are they?
So a money market fund is a mutual fund where investors put money into a fund, they buy into a fund, The net asset value of the fund is always $1. So unlike other mutual funds or exchange traded funds, they go up and down. Money market mutual funds want to keep the value at $1, but then return interest. And they do that by buying very short-term liquid securities. Short-term means that they are things that are going to mature within the next few weeks, maybe a month at the outset. Liquid means that they are like commercial paper, treasuries, repurchase agreements, things that trade in the commercial cash and money markets area that is really heavily liquid. So it's like buying and selling US dollars almost. It's almost that liquid. Well, I guess treasuries are that liquid, but the others are almost that liquid. And so money funds are not insured, right? But they are really pretty safe. They've been around for about 50 years. I think it was like 1971, maybe. And as far as I know, there have only been 2 times where they broke the buck. And they broke the buck is terminology, meaning that the underlying value of the securities was no longer worth $1 per share, right? And so the people who manage money funds don't want to be like the third one to break the buck. But even that would be more of a symbolic loss than like a bad thing for investors, because if it went from $1 to 99 cents, you'd be losing 1% on the value of your investments. Well, if you're getting 5% yield or 5.25%, even that like wouldn't be terrible. It's not like you'd be losing all your money or anything. I think the one time it broke was in 94, like because they had some sort of derivatives. And then I think in 08 is another time where somebody either did break the buck or was about to, and like maybe regulators stepped in and gave it some cash or something. So not as safe as insured cash because there's no insurance, but there have been thousands or tens of thousands of funds over the last 50 years, and only twice, I think twice, has the value gone below the dollar that it's supposed to be. So pretty safe.
Okay.
And one thing to keep in mind is that insured cash, that it's $250,000 per person. So if you do have to have a lot of cash, like a lot of institutions have cash, they don't have that kind of insurance. So they will buy money funds or the underlying investments. So not quite as safe as insured cash, but really like 99% as safe.
Okay.
It's not something I would worry too much about.
Do you agree with the statement, money market funds are a rational place to be for the next 6 months, but over the long term, taking risks pay you more?
I agree with half of that sentence, right? So I think that there's a little bit of a fallacy and people like compare different things. And that's why there's so much interest in money funds. First, there's interest in them because they're paying 5%. And for 15 years, they paid like less than 2%, right? So all of a sudden, it's like a viable place to put money. But I think the issue is that if you look at it as a place to stash for 6 months, then your like investment style is more like a gambler. Like, where am I going to put money now? Oh, I'm going to put money here because I could get 5% on it while I'm figuring out what I should do. While instead, we always think some sort of globally diversified portfolio with an asset allocation to your needs and risk tolerance is the right thing to do. So the idea of having cash for a little bit while you're making up your mind, I think that's like a wrong strategy. Now, the other part of that question, the first part,
money market funds are a rational place to be for the next 6 months, but
right?
over the long term, taking risks pays you more.
Right. Over the long term, taking risk pays more, right? So people are looking at that 5% in context that the stock markets and bond markets were both down a lot last year. And then the stock market, the indices, like the S&P and the NASDAQ are up. The Dow is basically flat for the year. So it's been a frustrating 2 years for investors. And so I think it's easy to say, well, I haven't made any money in stocks and bonds, so I'm going to put money in this money market fund. The problem with that is you don't know what the forward returns are going to be for stocks and bonds, right? And it can change so quickly. Last week, so we're recording this November 8th. Last week, all three stock indices were up more than 5%. So if instead of having the money market fund, you put it in the one of those index funds for the week before, you would have earned as much in the 5 days as it will take you a year that you think you're going so happy to be in that money market fund. Like, I'm not saying money market funds don't have a time and place, but it's not, I don't like the idea of like, oh, I'm going to put money there because the yield is high now while I'm deciding what else I'm going to do. You should figure out what your asset allocation should be, go to that allocation, and for the amount that should be in cash, a money market fund or an insured savings account are that's a high yield one are good places to put that cash.
Okay. So, how would you balance short-term safety with long-term growth in your investment strategy?
Yeah, so you do need, again, depending on where you're at, right? Like, if you are not close to retired, you're going to need money for emergencies and your savings. If you are retired, you're going to have mostly stocks and some bonds, and then some cash. And it really is based on like what's going on in your life should drive that, not the relative returns of money markets compared to what they returned a year ago. Does that make sense?
Yeah.
Like it's not that those returns that drive the question. It's what do you need in your life,
Yep.
right? So if you have sold your house and you're going to be buying another one next year, money fund with the proceeds is a great idea,
Yep.
or a treasury bill or a treasury note is
Yep.
a great idea. If you're just running along and you're 52 and you're working and you have your 401k and you have your emergency savings, unless your emergency savings isn't enough, and then you want to add to the money fund, you're better off investing it or maybe paying down some debt, if you have any kind of high rate debt.
All right. All right. So, given the potential drawbacks of holding a significant amount of cash, how do investors strike a balance between safety and opportunities for higher returns in the stock and bond markets?
Yeah, so we didn't talk too much about the drawbacks, but so say you have a 5% yielding money fund, which is a good rate on that. That the interest to you is going to be taxable like regular income. It doesn't get like the dividends or capital gains rate tax. So if you're in a high bracket, you could be losing 35% or 37% of that, right, to taxes. So that 5% return then becomes 3.5% return. But right now, inflation is still running at higher than 3.5%. So your real return after tax and inflation is zero from holding that. It might make you feel good to get a 5% like nominal or stated rate of return on that, but it's not helping, future Maddie.
Yeah.
It might help current Maddie feel like safe, like the money's safe,
Yeah.
but it's not helping you in the future.
Yeah. Okay. That makes total sense. What are the implications of the Federal Reserve interest rate policies of investment choices? How does the expected future path of interest rates influence your investment decisions?
Yeah. So again, it probably shouldn't affect your decisions because the decisions would rely on like that gambling thing, like, oh, if
Yeah.
interest rates rise up, I don't want to do this, I want to do that, blah blah blah, like I say a million times. But I mean, the rise in interest rates is what's causing this dilemma for investors, right? Because the rise in interest rates, brought up yields, which makes the value of current bonds be less, made the bonds go down. Higher yields are not good for future stock returns, make stocks go down. And then those higher yields translate to higher money fund rates. And so all of a sudden, people are kind of taking their eye off the ball and saying, well, the last 20 months haven't been great for stocks or bonds, but these money funds are paying significant rates. Maybe we should go to the money funds. And I'd say keep your eye on the ball. You keep limit what you invest in cash to what you need for cash, or money funds. I use those interchangeably, but insured savings or money funds are great for the part that you need to keep in money, in cash,
Yeah.
not for long-term investing. It's not a long-term investment.
Okay. How do you view the role of cash in an investment portfolio? Is it more of a short-term tool for safety, or can it be considered a long-term asset class? Share your perspective on the dating cash analogy mentioned in the article.
Yeah, so I don't like the dating cash analogy, right? So, they say like you should, it might have cash for 6 months. You don't want to marry it, right? So you want to date it but not marry it. That's a terrible analogy. Um, but what behind what the guy was saying though was it shouldn't be part of your long-term strategy to have cash, because that is going to have a drag on your overall returns, because cash is not going to perform as well over the long term as bonds or stocks. It just isn't. It's going to return better in years that are down for stocks and bonds, but bonds have had very few negative years in my professional lifetime, like 1994 and last year. So it's not a lot of negative years for bonds. They've had a lot of low return years because interest rates went so low. And stocks have bad years, a handful every decade, right? So in every 10-year period, you're going to have 2 to 4 years where stocks are down, but you don't know when they're going to turn around. Like, it was a pretty gloomy September and October in the stock markets. Last week and the start of this week has been very good. So you just don't know what's going to happen in the short run, but we know in the long run, those investments pay off and the returns are above inflation, whereas cash is not going to yield above inflation. So it's something that, it makes you feel good and takes your eye off the ball. But, I wouldn't date or marry it. You have like the amount that you need to have. Now, within the portfolios for people who are taking distributions from their accounts, we keep 3 to 6 months in cash there, so that we're not selling something every month to raise cash, and so that we don't have to sell something at a time that is bad. Like if we don't want like to have to sell something on what's potentially a really bad day in stocks and bonds, so when we do our trading and rebalancing of accounts, we keep the overall stock bond allocation and the client's cash needs in mind, so that they're all work in harmony and they have roughly the percentage that they should have. So the non-cash part, say for a retired person, 65% stocks and 35% bonds, we'll keep it around there. But while we're doing that, we look to see if they're taking any distributions or withdrawals, and then have it set up so that the portfolio software knows what those are, and then it will come in with we'll get pretty close. So somebody will be within a couple percentage points of their stock bond mix, and they're going to have somewhere roughly between 3 and 6 months worth of distributions.
Okay. So there's a balance.
Yeah, there's a balance.
Yeah. What are your thoughts on the current market turbulence and the attractive yields mentioned in the article that are driving investors to hold more cash in money market funds? Do you think that this is a wise strategy?
I do not. Okay. I think we've talked about this.
We talked about it, but just to
clarify, say it again.
Yeah.
Only keep in cash what you need to keep in cash. Okay. Don't be tempted or lured by that 5% return.
Okay. We are joined here today with Anthony Tazi. Anthony is the owner of Regerts Ink here in Yardley. Anthony, would you like to explain to our listeners what Regerts Ink is, a little background?
Yeah, Regerts Ink is a tattoo removal company. We lighten, fade, and remove tattoos for people that have either had a change in their life or looking for clean a slate and start over with some tattoos.
What are common reasons people come to you?
Usually it's usually a name change, a relationship change. It
Okay.
could just be the quality of the tattoo, that the work that was done. There's many reasons. A lot of names
Okay.
Okay. All right. So I'll get into that more, but a little more about you. Are you from this area, Yardley?
Not directly in Yardley. I'm from Mercer County, New Jersey. Most of my family's over here. So that's why we're here. Um,
What made you decide to open a tattoo removal business?
yeah, I had to unexpectedly retire early, and so I was looking for something to do, and we were on vacation, and I noticed people getting so many more tattoos than years past. Someone got one tattoo, two tattoos, your sports team or a name or something. But now people are just getting so many in such a short time. I was like, there's got to be a way to remove them. So I started looking into removal and the process and all that. That's brought me to new career change.
Yeah, that's awesome. So, how's business going?
It's going well. It's going really
Yeah.
well. It's with all new businesses, it's hard to brand yourself and get your name out there, and it's a niche business, so it's got to kind of stimulate people, let them even know that it's here. A lot of people aren't even aware you can remove a tattoo.
Okay.
Right. Where is here? What's the address of your
It
business?
it's in on Main Street, 91 South Main Street in Yardley.
Okay.
So it's pretty close to us.
When did you open the Regerts Ink?
In 2020.
Okay. So that was during COVID then, right?
Well, yeah, yeah. So then, actually, just right after at the end,
Okay.
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 in
So the
November.
pandemic really didn't affect your business too much.
No, luckily enough, I had trained just before the pandemic, went to school, learned all the techniques and everything, came back and was searching for a location in this area. And, right, that's when it all happened. So that held us out for a while. And just right after we started back up, as soon as they were able to ship us the equipment, which was the second problem after the pandemic, was shipping issues.
Yes.
So
Okay.
all our
Great.
equipment was stuck at sea. And, but shortly thereafter we started. So the pandemic didn't really affect our business, just delayed us from opening.
Okay.
Okay.
All right. So it wasn't horrible. It could have been much, much worse.
Yes. A few months difference. If I would have went to school a few months earlier and started, they had it
Yeah.
closed. It could have been really bad.
Yeah.
Right.
So are you the only one who does the tattoo removal?
My son and daughter-in-law are also trained, and they also help out. It's not their main business. They're just there in case something, I can't be here or
Yeah.
I want to take a vacation. We
Right.
can
You
sit.
want to take a day off once in a
Yeah.
while? What?
Yep. Yep. So yeah, they're trained also.
Okay. So is the business like, is it more of like a walk-in or is it more of people make an appointment?
It's an appointment service.
Okay.
Everyone books online. Some people do walk in, but for the most part, it's look. People search for it. They look for it. They plan a little bit, and then they contact and make an appointment with us.
Okay.
So-
All right.
And what's the process like? It's not like a one-time thing, right? It's usually a couple of appointments.
Yeah, tattoos take several treatments to remove, depending on the ink density, the age of the tattoo, colors involved with the tattoo, and the size also. So it
Okay.
can take several treatments to remove it.
Okay. So does that make it harder to remove the tattoo if it's been on the skin longer?
No, it's just the process. The process is the same. It's just a repeating process of fading the ink. So the process stays the same. It just can take longer.
Okay.
I love the idea that you're on vacation. You see, like there are so many more tattoos, right? Like
Mhm.
Yes.
when I was younger, like my uncles had them in the 60s, and not a lot of guys my age. I graduated from high school in the 80s. Not a lot of guys got them, and very few women got them. But I know that people younger than us started to get a lot, and then they are really pretty prevalent. And you see people with a lot, and so I get exactly what you're thinking. Anytime like somebody does something so much so quickly, they might want to do over, and
Yes.
especially with the names. It's
Oh,
so easy.
absolutely.
Yeah, it's so easy to think like, oh, this person's the one, and then maybe they're not. And you want that name off.
Yep. It's true.
Right.
It's true.
Is there a common myth about your job or field of expertise?
That it's very painful, or that you cannot remove the ink all the way back to the way the skin was. So that's usually the question you get asked. Can he really remove it all the way? How
And the
painful?
answer is yes.
Yes, you can.
Wow.
Yes, you can.
Okay.
It's a process. It takes
Yeah.
time, but the ink can be removed out of the skin over time.
Okay. Does it leave a scar?
No, it doesn't.
It
That's
doesn't.
also another myth. It doesn't leave a scar. The laser will not harm the skin. Sometimes when you got the tattoo, it can scratch. The needle can cause a scar then, but the laser will not.
Okay.
Okay.
So
So
you might
usually,
not see it. You might not see it when you get it, when you get the tattoo, because the ink is blocking it, but the scar is there from that time that you might notice it when the tattoo is not there. I guess that
we're
makes
correct.
sense.
And you can feel it on the surface before we start the treatment. So I'll
Okay.
make you aware of if there's a spot that feels like it's scarred, just so it doesn't come back and think it was the laser that did it.
Right. No, it's a good
Okay.
idea.
Yeah.
Mhm.
So is it a painful process?
It's each person takes it a little different. Where it is on the body also dictates how much pain, how much it will hurt. We use an anesthetic chiller to keep the area cold. We use numbing creams and ice packs to lessen the pain. Best way to say the feeling is a hot bacon grease hitting you, or snapped with a rubber band briefly. I had one removed so I could explain what it feels like instead of just telling everyone what I heard it felt like. But it's hot bacon grease at a light, a little snap from that, and then it's fairly quick. It just depends on the size of the tattoo.
So basically, if you can handle getting a tattoo, you could pretty much handle getting it removed.
Absolutely, yes, yes.
Okay. All
Yeah,
right.
it's not tolerable.
Right.
Yes. Yes. Okay. That makes a lot of sense.
Mhm.
Cool. So, do you guys do tattoos there as well?
No, we do not.
Okay.
No, we're just
So,
removed.
so as I was on your website, I saw you guys have something called a Hollywood peel.
Yes,
So what is that?
that is it's a face peel, like a chemical peel without the chemical. What we use is liquid charcoal, apply it to the face, and then we heat it up with the laser and then remove it with the laser. And the benefits from that are skin exfoliation. It shrinks the pores, stimulates collagen in the face. It gives the face a natural glow. It's a really good procedure you can get done before you go out for the evening. You don't have that blotchiness like you do from a chemical peel. Um, the results are instant, and it's
Wow.
great for acne and other skin issues. It evens out the skin tone.
That's
Oh,
awesome. So is that like a popular procedure people get done?
Yeah,
Yeah.
yeah, yeah. So a lot of people get it during proms and wedding season. They get them before they go out for events.
Wow. So I'm guessing it's not very painful.
No, that's not at all. We don't.
Okay.
The anesthetic chiller is not even used in that procedure. It's very light procedure.
Anesthetic chill. So is that just basically cold air?
Correct. That's just cold air. It's a device we use to lower the skin temperature for the thermal reaction of the laser. It's just minus 13 degrees Celsius air that we blow on the skin for a few
Okay.
minutes prior to the laser treatment.
What do you like best about what you're doing?
Helping people. A lot of people come in here, they're just very upset with the decision they made. If it was, and sometimes they get people the day they got the tattoo, come in the next day upset. They didn't like the placement, they didn't like the subject matter, they didn't like the way it came out. Placement. There's so many reasons that I can get a call immediately, and to be able to help people like that and calm them down and tell them that it's going to be all right. We can get this tattoo off. We could adjust it so
Oh,
your skin will be the way you want it again.
yeah. Wow.
Sense.
So is that something you can do? Like if you get a tattoo and you want it removed, is there a waiting process involved?
Yeah, you have to wait 12 weeks to let it fully heal, and then we can start the removal process after that.
Okay. That makes a lot of
okay. So it doesn't have to be permanent. It's just 3 months.
Yes,
sense.
yes.
Okay.
You do have to sit with it for a little while after that immediate regret, but you can start the process that year.
Okay. So I
Good.
think I might know the answer to this question, but Where did Regerts Ink come from?
It came from the movie We're the Millers.
Yep.
And it just was just a funny, it was at the time when we were developing the business, and I was going to school and trying to figure out what we were going to do with the business, and it just stuck out. And
Mm-hmm.
his neck tattoo was just perfect. His says no ragettes, but
Yes.
it's just a funny line where he says, you have not one
I
regret.
love it. I think
Yeah,
it goes hand in hand with the marketing too. I mean, everyone's
yeah,
seen We're the Millers, you know.
exactly. Yes, exactly.
All right. So, with all the success you have achieved, what is the biggest challenge you're facing or you have faced?
Just continue to bring new people through the door. The economy is tough with everyone not wanting to spend. This is not, people are happy to put a tattoo on. They're not so happy at the cost of removing a tattoo. So as it's not as high in people's priority list to do. So just to keep people focused to come in and get them through the door to get it taken off is a concern.
So what is the time span? Like someone comes in for their first appointment, does the laser. So how long do they have to wait until they come back for another appointment?
6 weeks. 6 weeks between appointments, and sometimes a little more depending on the amount of ink that we're working with. So 6 to 8 weeks.
Okay.
And how many treatments is typical?
7 to 15.
Okay.
Like 10 to 15 in that range, depending once again the subject matter. If it's dark ink, light ink, thin line, dark line, if it's something that's filled in.
Does take some time and money, so it's not permanent. It doesn't have to be permanent, but that mistake will cost a little bit. That's okay.
Yes.
So as long as you can recover from the mistake, right, and get it fixed, it's okay if it takes a little time and money.
Absolutely. If it makes them happy, then that's what they're looking for. Then I'm here to help.
If you could be remembered for one thing, what would it be?
That I was kind and nice to people and giving.
Yeah. If you could go back to your 18-year-old self with one piece of advice, what would it be?
Let's see. Learn to trade. Learn to trade.
So we know your time is incredibly valuable, and we greatly appreciate you spending time with us. For those watching and listening and want to learn more, where is the best place for them to learn more about Regerts Ink?
On our website at regertsinkremoval.com.
Okay.
Social media.
Okay.
We have Facebook, same Regerts Ink Removal, and Instagram, Regerts Ink.
Right. Okay. And you're at 91 South Main Street in Yardley, right in the middle of town.
Yep. Right next to the firehouse.
I really like your Instagram too. Like I saw how you have like common questions people ask and an answer to it. I think that's very helpful. People don't.
We're always looking for that. Yeah.
Yeah. And people don't, they don't look up ink removal near me and call the first person. Like they're going to go on your Instagram and I think that helps a lot.
Yes.
Anything that they might be double guessing, might be able to help them.
Yeah, try to answer all their questions for
them. Yeah.
Yeah, no, it's good.
For more information on Yardley Wealth Management or Yardley Estate Planning, you can visit our website at yardleywealth.net and yardleyestate.net. You can also follow us on socials at Yardley Wealth Management. This podcast has been produced by Madison and Mike Gary with technical and artistic help from Poe Productions.